Have you guys ever heard someone say like, oh, I'm really bullish on the market and wondered, what does that mean? Well, stay tuned because today we're going to talk all about bull versus bear. Hey guys, what's going on? This is Alice. Welcome back to Money with Alice, where we talk about all things personal finance, investing, and so much more. If you haven't already, please make sure to give this video a big like because it really supports my channel. And let's get started. So when I first started following the financial markets, I quickly encountered the terms bull and bear. And then I thought to myself, I'm not really sure what bull or bear means. If you guys have started looking into trading or just got started into trading, I'm sure you've encountered these terms, and I'm sure you've also come up with a question, what the heck is bull and what the heck is bear? So when it comes to discussion on the market and you see the word bull and bear, we're not actually talking about animals or any sort of zoo in this case. We're actually talking about the future expectations of the financial market. You might hear someone say like, oh, I'm really bullish on the future performance of Tesla or any other stock. Or you might hear someone say like, I'm really bearish on the overall financial market overall and the future expectations because valuations are at an all-time high. What that really means is that if they're bullish on something, they're really positive on the future expectations. If they're bearish on something, they think that in the future, this performance will go down. So again, bull and bearish is just the outlook on the market. If you're bullish on something, you expect that in the future, the stock price or the performance will rise. If you're bearish on something, you expect that in the future, the stock price or the performance will go down. So bull, good. Bear, bad. So there's actually a very interesting history behind why bull and bear came to be representative of the positive and negative expectations of the market. So the way that this came about is based off of how the animals actually attack. So for a bull, usually when they attack, they will attack from the bottom and go up because bulls have the horns, right? So they'll use the horns to dive up, which means similar to the reaction of the stock market, like a bull, if you're bullish, you're expecting something to go up. Now for the bears have claws, right? So the bears will use their claw to claw from up to down, meaning that if you think something is bearish, similar to how a bear attacks, you're expecting something to fall from really high to really low. Again, these two movement terms, bull and bear, correspond to the way that the animals attack and as a metaphor for how they expect the market to perform. If you're expecting something to be bullish, you expect it to be going up, like how the bull attacks. If you're expecting something to be bearish, then you're expecting something to go from really high to really low, just like how the bear uses its claws to attack its enemies. Okay, so that's the quick lesson today. Now you can talk your lingos like a trader. So a question for you is, are you bullish or are you bearish on the future expectations of the market? Leave a comment down below. If you enjoyed this video, also please give it a big thumbs up because it really supports my channel, and also don't forget to hit that subscribe button down here, and I'll talk to you soon in a future video.